Okay, so what we're going to be talking about is cryptocurrency portfolio management. Okay, again, cryptocurrency portfolio management. So how do you manage your portfolio, effectively? How do you balance it? There is something called portfolio balancing and rebalancing. Okay, some people have gone to the point of, you know managing their portfolio by themselves, but unfortunately they are not able to balance it correctly. Okay, they are not able to even rebalance it, because portfolio management is a job on its own. Okay, and you must be able to balance it at the right time. Okay, and also rebalance it at the right time. That is the essence of managing a portfolio. Okay, whether you are managing your own portfolio or you are managing portfolio for other people. Okay, so it is your job to always balance and rebalance the portfolio. So throughout this um session, we're going to be talking about portfolio balancing. Okay, portfolio management in general. All right. So one of the tools to track your portfolio is the Coinmarket portfolio tracker. Okay, and I think CoinGecko also have a portfolio tracker. Then Lifecoin Watch, they have their own portfolio tracker. Okay, there are a bunch of portfolio management tools that you can use right there. They are all available on the internet. Okay, so it is your job to look for the one that makes sense to you. That's it. All right. So, but before we proceed, let me show you something real quick. Um, Look at this. I've actually been managing portfolio. You know, this is not even my own portfolio. It's a portfolio I'm managing on behalf of someone. Okay, and he signed up with me for 2 years. We had a 2 years contract together. So he signed up with me since March. Okay, since March 2023. That was when he signed up. All right, and this is how I've been managing his portfolio. All right, so now look at March. There's a March report, there's April report, then there's May report. So like every month I keep on updating these reports, and I'm using Google Doc for that. So a combination of Google Doc and Google Spreadsheet. Okay. So after writing these reports, okay, then I will update the spreadsheets. Right. So I would update the spreadsheets. There's a way to go about it. So once the spreadsheet has been updated, the next thing that I do, okay, is that I copy the link from the spreadsheet and I link it with the document, so you can have access to both data. All right. So the link to this spreadsheet has been with him. Okay. All he needs to do basically is to refresh his page, or to click on that link. All right. So now this is the percentage as at 2 days ago, right? Yeah. This is the percentage drawdown on the assets that has been bought. So we have minus that 1.41% drawdown on that portfolio. Okay, can you see it? Then this is on those assets rather, and this is the drawdown on the entire portfolio, which is minus 15.88%. Now you're going to be asking, okay, like how did you manage to have minus 15.88%? Okay, despite the fact that some coins you are down by minus 40%, minus 30%, they are really down badly. Now, let me go back to Coinmarketcap. Uh, for those of you who are in the WhatsApp group, the CryptoNet WhatsApp group or the CryptoNet Telegram group, you will be wondering, like, why is this guy buying coins? Like, some people even have this opinion that I'm buying coin irresponsibly. Okay, so if you look at Solana, it got that really bad. Some of them are just coming up now. Okay, they've gone by like 35% loss, 40% loss. Despite all of this, okay, look at the beginning of the year. Let me show you the beginning of the year. This is Bitcoin, isn't it? This is Bitcoin charts. Let me even go to coins like let me go to coins like Filecoin, for instance. Filecoin has been part of my portfolio. Look at this. This is down minus 26%. So let me click on it. Then I'm going to go to monthly, or let me say weekly, 7 days. So I'll switch to, I want to use candles. Let me switch to candles. So if you look at this is 7 days, isn't it? This is 7 days. Let me go to daily. Okay, this is daily. Let me use 1 year. Like I can see, it has actually been going down consistently. Okay, consistently. Look at this since March, around $7 since March. Look at the price now, 3.4 from $7.5 around that level, 3.4. So it has really lost more than 50% of the value, right? So if you look at Bitcoin since March also, Bitcoin has lost a huge value since March. Okay, if you look at Bitcoin also, it's been on a downward spiral, isn't it? But let me click on this. It's been on a downward overview. I'm going to click on candles. I'll click on the 1 year. Can you see? Since March also, Bitcoin has been on downward spiral at the same time. Can you see? So now, if you look at this, between Bitcoin and Filecoin, which one of them experienced the greatest downtrend? Okay, it is Filecoin. Okay, being an altcoin, and somehow in the crypto world, a lot of currencies, let me say more than 80% of currencies in the crypto world, they are highly correlated. Okay, so because they have this high level of correlation, it makes it even hard. It makes it even hard to balance the portfolio. Okay, unlike when you are balancing the stock, when you're balancing stock investments. Okay, when you're balancing stock investments, it's even better than when you're balancing your crypto investments. Okay, so it's been a downward spiral since the beginning of the year. Since about I think since March, since March, it pumped a little bit since March. Then started from April, it's been on downward spiral. That's for Bitcoin, right? So now, the thing is that when you look at Bitcoin and Filecoin, I'm just giving you an example. Okay, you will discover that Filecoin is way more volatile than Bitcoin. Okay, with between March, April, and this time, Filecoin has lost more than 50% of its value. Then when you look at Bitcoin is yet to even lose up to 30% of its value. Alright. So it is yet to even lose more than 30% of its value. Okay, that is why you have to put money in Bitcoin. Okay. So you buy Bitcoin, you buy Ethereum, okay, then you buy some other altcoins. So you divide your portfolio into three categories. Okay. The categories are the high risky assets, okay, the high risky and those assets with high risk, those assets with medium risk, okay, and those assets with low risk. So Ethereum and Bitcoin, they are classified under low risk investment in crypto. Okay, they are classified under low risk investment in crypto. All right. Then Ethereum, Bitcoin, USDT, stable coins generally, okay, especially those stable coins that have proven themselves over and over again in the industry, which is Theta, okay, and DAI. Excuse me, which is Theta and DAI. These are the two, and also USDC. USDC has been around for a very long time, and they are proving themselves also over and over again. Okay, so you have those ones in your portfolio. Okay, you have them in your portfolio. Then when you have them in your portfolio, then you now balance them with some other medium risk assets. Okay, medium risk assets. So an example of medium risk assets could be like Ripple, like Ton, like you know, like Ton, for instance, and some other OG coins. Okay, like Syscoin, like Filecoin, you know, EOS also is part of it. So those coins that has been existing in the industry for quite a long time. okay, for quite a long time. So you can balance them with those medium risk. Then of course, those high risk coins like meme coins, they're high risk assets. Okay, anything can happen. Okay, so you balance it with those ones also. I'm not saying you should buy meme coin for God's sake. I'm just giving you an example. So then those newly created coins like optimistic roll up, like Arbitrum, like Sway, like Aptos, okay, all of these are newly created projects. Really, they are newly created. You can see Aptos actually dropped by over 30% in the last 7 days. So those are new class of asset in the crypto world. Okay. And for some reasons, in the next bull market, those new class of asset it tends to really outperform the old guys in the industry. Okay. Because more money flows into them. Okay. So those when we eventually experience the bull market, those new class of assets they tend to outperform the old guys. Okay, so despite that they are highly risk assets. So, and you know that in the industry, there's something called risk to reward ratio, isn't it? Okay, there's something called risk to reward ratio. So those high risk assets, they tend to give you high returns. Okay, that the medium class asset, those assets with the medium risk, it tends to give you a kind of medium risk reward. No, sorry, medium reward. Okay, then the low risk asset like Bitcoin, they're going to be giving you a low reward at the end of the day. Okay, by the time you hold this for like 2 years, 3 years, okay. So now that is one thing you have to take notes as far as portfolio management is concerned. Okay, so as far as portfolio management is concerned, now I'm going to show you how these tools are being used. Okay, how to use that. Even though I have a full tutorial on the YouTube channel. So if you have anything to share with me, probably have an opinion to share, okay, feel free to use the live chats. Okay, feel free to use live chats. I'm gonna be here to respond to your messages. All right, I'm gonna be here to respond to your messages. So now we hit 1,600 likes. Okay, that's really impressive. So we hit 1,600 likes. Wow, that's impressive. That's impressive. Okay, so we have over 250 people who are watching live at the moment. Okay, so let me continue with the teachings. Let me continue with the session. Okay, I'm going to continue with that. All right, I'm going to continue with that. Okay, so as you can see, we have high risk, low risk, and medium risk assets. Newly created coins, no matter how strong the project appears to be, I always classify them as a low risk as high risk. Okay, meme coins, those coins with billion market cap, but they are still new. They are also referred to as high risk. Okay, of course, you can see how Luna performed. Okay, Luna was like a baby of the last bull market. You can see how it messed up the entire asset of people. So that shows that it is still classified as a high risk, despite being a coin with massive market cap. Okay, because some people make a mistake of classifying assets based on the market cap alone. Okay, based on the market cap and probably the volume alone. Okay, it's not the right way, in my own opinion. Okay, we classify based on the age of the project, how long the project has been around. We classify based on the volume, the market cap, the backing, those who are backing it, and the community around those projects, plus the use case of that project. That's how you classify them. Okay, so now having done that, then you have, let me say you have $10,000 capital. Now, how would you assign it? Okay, I'm going to just go to exchange. Okay, after marking out those assets, after classifying them, I'm going to go to exchange right there and start buying on impulse. Okay, I start buying on impulse. Well, in my own view, that is not the best way to go about it. Okay, so what you have to do is to say, oh, now that I have access to $10,000 capital, Okay, the next thing I'm going to do is that I'm going to divide this into 20. Yeah, I'm going to divide this into 20. Okay, then if I divide this into 20, then what I'm going to have is I'm going to be spending only $500 a month. Okay, as a matter of discipline. I'm going to be spending only $500 a month as a matter of discipline. Okay, that is where this discipline comes in. Okay, so now how do I go about it? First and foremost, uh, I'm going to be buying low risk assets. Okay, so every month I'm going to buy low risk assets. Every month I'm going to buy high risk assets, and every month I'm going to buy medium risk assets. All right, so that's $500 now. You can now divide them further into three. Okay, so into three. So when you divide them into three, you use $250. Okay, you use it to buy low risk assets. All right, now you're still left with 250 extra, isn't it? Then you use 150 of it to buy those assets that are classified as medium risk assets. All right, then you only spend $100 for that month, okay, on high risk assets because you're taking a very big bet, okay, on high risk assets. So the idea is that you want it to be as balanced as possible. Now, the choice of the asset that you buy, it has to do with your own research, okay, your own research and your conclusion, okay. That is how you were able to see what you're saying here, okay. Like this specific portfolio, you know, I was able to maintain the overall drawdown. I was able to contain it to only minus 50.88%. Why? It's because since that time, I'm not overexposed to the market conditions. Okay, that's how to be a professional manager. I'm not overexposed to it. Okay, so we need that in that portfolio, we still have some cash, in stable coins. Okay, we still have some cash in stable coins, right? So that is why I'm able to control this drawdown. So if today, for instance, now, although that is not what we have in mind, if today I decide to liquidate the entire assets, okay, if I decide to liquidate the entire assets, so the only loss I will incur is just 15.88% loss. All right. So in crypto world, okay, for those who are coming from a traditional background, 15.88% might be a big deal to them. Okay, it might be a big deal to them. But for those who are coming from, you know, uh, the crypto industry background, okay, you don't see minus 50% drawdown as a big deal in your portfolio. It doesn't appear to you like a big deal, except maybe you're just a newbie and just getting started. All right. So now let's have a look at what the AI will say. Okay, so I went here, I asked the chat GPT, okay, AI to tell me. I said, imagine that you are a professional crypto portfolio manager. How would you advise a newbie to manage his crypto investment? That is the question I asked the AI. And this is what the AI said. It says, start with a small investment. Then it says, diversify your portfolio. Okay, so diversification is key to reducing your risk. Invest in a variety of cryptocurrencies rather than just two or one. This way, you can spread your risk and reduce the likelihood of losing all your investments. If you've had your portfolio invested in Luna, okay, you have Luna coin and you have UST. By now, okay, your money will have been gone forever. Okay, but if you only have like 3% of your portfolio in Luna, okay, it doesn't make much, although you're going to feel the impact, but it doesn't make much difference because it is just 3% of the portfolio. Okay, That is why you have to keep your emotions in check. Like my friend said, he says, most of us are always emotional. Okay. He's right. Letitiad is right. Okay. I saw his comment in the live chat. It is right. So you don't become emotional. Okay. When you say portfolio management, every portfolio manager will have a plan. Okay, you have a plan. Okay, so if you alter that plan often, you know that you are a bad portfolio manager because you're not sticking to your game. You're not sticking to your plans. All right. So he said, stay up to date with industry news. Keep an eye on the latest news and updates in the crypto market. This will help you make informed investment decisions. Okay, part of keeping updated in it is like understanding the trend. Okay, the trend that, oh, this is AI trend. The trend is fading off. Then we had the meme coin trend. They are also fading off. Okay, the new trend now is probably like real world assets, and even that is still going to fade off. Obviously, it's still going to fade off. So, and also you choose a reliable exchange. Okay, that's why you choose platforms like OB. Okay, like OB Exchange, OB Global. Okay, so you choose a reliable exchange. Okay, you have Binance, you have OB, you have Coin. Those ones that have been around for a while and they are highly reliable. Those are the exchanges that you should choose. Okay, so always trade on reliable and reputable exchange to ensure the safety of your investment. So, as a portfolio manager, you are not trading on those platforms alone. Okay, you are buying those assets and you are withdrawing them into a private wallet. Okay, a private wallet could be a cold storage or a multi-signatory wallet. Okay, you buy those coins and you send it to those wallets. All right, or you probably send it into the wallet of your clients. All right, or whichever one that you are comfortable with. But so you're not going to buy an asset and leave it on centralized exchange. It doesn't make any sense. Okay, so it makes you a bad portfolio manager. All right. So whether you are doing this for yourself or you are doing it as a service. So I personally render um I personally render crypto portfolio management as a service and I get paid for it. Okay. And I get paid for it. So now use the hardware wallet. A hardware wallet is a physical device that stores your cryptocurrencies offline. Yeah, offline. So this provides an extra layer of security and protects your investment from cyber attacks. Okay, so that's the advantage of hardware wallet. So if you don't use if you don't if some hardware wallet cost as much as $250 up to 500 and $1,000 for some of these hardware wallets. Okay, but not everyone can afford to have a hardware wallet. Another option I can explore is a multi-signatory wallet. Okay, so what is a multi-signatory wallet? Let me ask. Okay, sorry that I'm using a combination of Google search engine. What is a multi-signatory wallet? Which is a multi-sig wallet? Look at this. So a multi-signature wallet is a cryptocurrency wallet that requires multiple signatures instead of just one to execute each transaction. Okay, the signatures are associated with different cryptographic private keys, while a defined threshold of keys must sign a transaction to validate it. So what this is saying in general is that when you say multi-signature wallet, like different parties must use their private keys to sign that transaction. It could be 6 people, it could be 20 people, it could be 10 people. Okay. So probably out of that 10 people, then there is specific amount that must be signed. Like maybe like 6 out of 10 is a simple majority. Okay. 6 out of 10 is probably a simple majority. And once they sign that transaction, then that transaction is going to be confirmed on the blockchain. Otherwise, so if one of them should be hacked, or two of those guys are hacked, then definitely the other guys can sign the transaction and it's still going to pull through. Okay, that is the essence of a multi-signatory wallet. Okay, so you can try multi-signatory wallets if you would like, or you probably try Let me check. You probably buy an hardware wallet. They are all available on the internet. Okay, on the internet. So let's see what they have to tell us. Okay, says I have a long-term strategy. Okay, you don't just buy on impulse. So when people make a mistake, okay, and one of the mistakes is that they actually have some funds that they are willing to use to buy crypto, for a long time. Then they jump on Discord, they get to Discord, they get on Telegram, and their friends start talking about a specific coin that's going to become the next big deal in the crypto world. Like this coin is going to pump hard, it's going to become the next big deal in the crypto world. Okay, so they get carried away with this kind of information. Okay, they get easily carried away with this kind of information, and before you know it, they are going to hip on that coin. Okay, then normally they're supposed to invest $500 a month, okay, and invest it strategically based on their plan. Okay, that month they might decide to pull out extra 500, making it 1,000. Then they will jump into that asset that they will buy it. Okay, and they will buy it. And the moment they buy it, you know, discover that they're in a big, big, big trouble. All right. So they're in a big, big trouble because that could actually become a bad investment decision. Okay, that could become a bad investment decision. All right, because they are actually violating their own rules. Okay, they are violating their own plans. Okay, so do not don't violate your investment rules as portfolio manager. Okay, so avoid impulse. I'm gonna say impulse buy. Yeah, we hit 2,000 likes. That's crazy. I love that. Avoid impulse buying and selling. Okay, so you need to avoid impulse buying and selling. That is really, really important. Okay, so a good manager do not buy on impulse. Like someone is talking about this, I want to buy it. No, that is sign of a bad manager. Okay, so you need to have a long-term strategy. Okay, so because crypto investments are highly volatile, and it's important to have a long-term strategy instead of chasing quick profits. Yeah, have a long-term strategy instead of chasing quick profits. So there are coins that so there is a concept of dollar cost averaging. Okay, you have a DCA. Let me say uh dollar cost averaging in crypto. All right. So when you say dollar cost averaging in crypto, this was exactly what you see. Say dollar cost averaging in crypto means smaller equal investments on an ongoing basis instead of making it large or regular buys. Okay, instead of making it large regular buys. So the fact that you are dividing your funds into 20, that you can use it over a period of 20 months. Okay, it means that you are actually dollar cost average. You're not actually jumping in at once. Okay, irrespective of the prices. Okay, you are buying them gradually, gradually. All right. So because you are buying them gradually, you are averaging out your risk. Okay, you are averaging out the downside. Okay, the possible downside of it, you are averaging it out. Okay, so if there is a massive dip, okay, then during that massive dip, you're able to buy even more. Okay, you're able to buy more. Okay, so because you are balancing it, that is the essence of having a good dollar cost averaging. It is part of the strategy that is being deployed by portfolio managers across the world. Okay, that is being deployed by portfolio managers across the world. And one of the reasons why you should be staying up to date in the industry is probably because There might be a rumor, there might be a news that a specific crypto asset, or a specific project, they are going through some hard times. So if you have access to that information earlier enough, as a portfolio manager, you go to back to your portfolio, okay, you send that coin to exchange, and you sell it. You sell it. Okay. If it's a coin that you are highly interested in, you wait for things to go real bad. Okay, you wait for it to dip. For instance, now by the time you started hearing about the Binance trial, the buying allegation, okay, Binance was actually BNB was trading around 305, $310. Okay, as at that point in time. Okay, when the things went bad, what did you see? It actually dropped to 220. All right. So a portfolio manager could actually sell at that point, then look forward to buying back at a lower price. Okay, that means that you're going to be having, without actually increasing your investment capital. Okay, by paying attention to the industry news, you are buying, you are selling higher and buying lower. Okay, even if you are not making much profit when you sold. Okay, by the time you buy, you are having more BNB. Okay, so if you are sold at the early stage, if you are buying back now, you will have increased your portfolio by extra 20%. You will have increased your BNB holdings by extra 20%. Okay, that is if it's a coin that you are still very much interested in. Okay, but you know that the bad news could hit them real bad, but you believe that they're still going to bounce back. Okay, otherwise, you just sell and you don't need to look back. Okay, you sell, then you look for another asset, okay, that you can invest that money into. Okay, so that is the essence of portfolio management. It's not a rocket science. Okay, so portfolio management is not a rocket science at all. Okay, so I'm going to say again, portfolio management management is not a rocket science at all. Okay, it's not rocket science. It is what anyone can do. Okay, anyone can do it. Okay, it is not a rocket science. Anyone can do it. So if you're just watching again, okay, uh, follow me now for more insightful crypto analysis and price predictions. All right, so follow me now. Hit the follow button because at the end of the live stream, I'm going to be shouting out to my new followers. Okay, I'm going to send shout out to my new followers before the end of the live stream session. Okay, so we're still talking about crypto portfolio management. Okay, crypto portfolio management. All right, so that's how to balance your portfolio. Okay, you balance it, but there's a tool here that I want to expose you to this tool, which is a portfolio tracker. Okay, if you want, you can connect your wallet address. Okay, it will sync with this instantly. Okay, and you can use manual transaction. Let me say Obi Life. That's the name of our portfolio. I'm not saying let it tear. Let me say let it tear, which is the name of our friend. Let it tear portfolio. Okay, let me check if that is correct. If that name is correct, I want to be sure. Okay, so we have mami dot vas. Okay, let it tear CLI. Okay, let's see how CLI play. So I'm going to create a portfolio for him. Okay, so this is his new portfolio right here. All right, this is his new portfolio right here. Let's say we are investing $10,000, okay, into this. Probably want to buy. So this is how to, you can either connect your wallet if you want. You can connect your wallet. Okay, if you click on connect wallets, okay, you can create a name, then you add the wallet address here. It will show you everything you have in your portfolio. Okay, so they are supporting Ethereum, Binance Smart Chain, Polygon, Arbitrum, Avalanche, Optimism, and Phantom. These are the wallets that they support. So if it is Bitcoin wallet, if it is Ripple wallet and all that, they're not going to be supported for now. Okay, so now you can hide the transaction manually. You can say, okay, I want to hide Bitcoin. Okay, what's the quantity? Maybe like 0.01 Bitcoin, for instance, or 0.03 Bitcoin, or 4 Bitcoin. Okay, then you can add it. Can you see it's been added in our portfolio? Can you see it? Then you can add more. You can say, okay, you want to buy Ethereum. You can say you want to buy 0.5 Ethereum, 0.6 Ethereum. Okay, so you can add it to it. Okay, once you are buying, every time you buy, so you go to Coinmarketcap portfolio tracker, then you add that transaction. Okay, you add it. Okay, maybe you bought let me say Cardano, for instance, and you bought like 2,000 Cardano, for instance. Okay, the quantity and the price that you bought it. Okay, then you can add it to transaction. If you could like, you can add the fee. Maybe the fee is 20 cents is the fee. Add the fee to it. Okay, it's gonna affect calculation. You can even add a note. Okay, I bought this because of new upgrade upgrade on Cardano blockchain. Can you see it? Cardano blockchain. So that's why you bought it, isn't it? You can add that note to it. A note has been added. Okay, then you add the transaction right away. Okay, can you see it? Okay, it is gradually adding up. Yeah, right away. Guys, is this making sense to you? Okay, if this is making sense to you, I want you to hit the like button. Okay, now hit the like button. Okay, let me know in the comment box if it is making any sense to you. Okay, if it's making any sense to you, let me know. Okay, so if this session is making sense to you, let me know in the comments box. Okay, so if this session is making sense to you, feel free to let me know in the comments box. Okay, let me know in the comment box if you're enjoying this, if you are liking this, and it's actually making any sense to you whatsoever. I'd like to know. All right. Okay. Thanks for the roses. Okay, so feel free to send me some roses if you want. Okay, feel free to send me roses. Okay, feel free to send me roses if you want. I love roses. Okay. Okay, so feel free to send me roses. I love them. Yeah, I love them. So let's even add more. Okay, let's add more. So I'm gonna add. Let me say I'm gonna add sheep, for instance. Can add sheep. Can add. Let me say 30 million sheep. Okay, maybe 20 million sheep, for instance. I'm gonna add it. Okay, I'm gonna add it. Okay, so now you can see this is the worst performer. Cardano is the worst performer. The best performer at the moment since the time we added it was on Ethereum. Okay, all-time profits. This is it. Okay, so you have access to a bunch of data. Okay, you can check it like 7 days data, 30 days data, 90 days, all 24 hours data. Can you see? You can scroll down, look at the profit and loss, the profit that you've made on each of them so far, the loss that you've made on them so far. Okay, if you have sold this, you can even click on remove. You can remove them. Okay, you can remove them. You can even add to it. You can add more. You can add more to it. Okay, so there is a bunch of things that you can do. Okay, just by okay, there's a bunch of things you can do just by using this tool. It's quite simple to use. Okay, not a very hard and complex thing. Right? So as you can see, you have access to a wide range of things right here. Okay, 24 hours performance, 30 days performance, and more. Right. So now you have access to the tools. Use it as you wish. Right. Use it as you wish. Right. So if you probably have any question with respect to what I've shared with you today on portfolio management, feel free. Okay, PIY says hello, hello, what's up with you? We have um, someone said 100 USDT. Okay, I don't know what you mean by that. Okay, so feel free to let me know if you have any question, any suggestion, any contribution to what I've shared with you today. Okay, feel free to use the comment box and let me know. So if you're watching this on YouTube, ensure that you subscribe to the channel and make sure that you turn on your notification for more and insightful crypto knowledge like this. Okay, crypto knowledge and information like this. Okay, so I'm sure before now, you've been hearing about portfolio management, but you don't know exactly how to go about it. Okay, but now that you know, you've gone through a masterclass on crypto portfolio management. Okay, so that's it for today, guys. I hope to see you very soon.